1.1 quadrillion yen is sitting in cash in Japan right now, earning next to nothing. This is 7.4 trillion in terms of dollars, and one company just made the first legal move to pull this all into Bitcoin. That company is Metaplanet, the largest corporate Bitcoin holder in Asia with more than 40,000 Bitcoin on their balance sheet. This week, Metaplanet acquired a licensed Japanese securities broker called Saibo Securities. And this one purchase opens a door that every other Bitcoin company on earth is locked out of. The big picture here is understood by almost nobody outside of Japan. Japanese savers have been earning nothing on their cash for years. The yen is collapsing in terms of purchasing power, inflation is rising, and $7.4 trillion of capital is searching for a yield that they can't get in Japanese bonds. To quote Metaplanet CEO Simon Jarovich, the significance is hard to overstate. By the end of this video, you'll understand exactly what Metaplanet is building, why almost nobody, not even Michael Saylor, can copy this, and why this is the biggest story in Bitcoin so far in 2026. If you'd like to understand the most asymmetric opportunity in the Bitcoin treasury space, then stick with me to the end of this video because I'm going to break down all of the various dynamics at play. The perfect storm is forming around Metaplanet right now, and while SATA and Stretch have dominated a lot of the media coverage around Bitcoin treasury companies recently, Metaplanet has been quietly building this moat that will insulate them from any other Bitcoin company being able to do what they're about to do. And let's start with what actually happened, because I'll be honest, the headline here does not do this story justice. Metaplanet announced they are acquiring 100% of a company called Saibo Securities. This company is a licensed Japanese securities firm. They're one of the pioneers of the online corporate bond market in Japan. This acquisition is expected to close in July, and after which they will be renamed to Metaplanet Securities. On the surface, a Bitcoin company acquiring a small corporate bond broker doesn't seem like that big of a deal. It seems like just another footnote in this broader story of corporate Bitcoin adoption, but it goes much deeper than that. Simon Jarovich calls this the first concrete step in what Metaplanet has dubbed Project Nova, their long term plan to build an entire Bitcoin based financial ecosystem inside of Japan. Here's what this acquisition and this license will actually let them do: it lets Metaplanet legally build and sell financial products backed like Bitcoin, such as a Bitcoin backed bond. From a legal perspective, Bitcoin backed bond is much different than the preferred equities that we're seeing in the United States. But before we break down that difference, you have to understand why Japan is the perfect market for something like this. It starts with interest rates. For over a decade now, the Bank of Japan has run the most aggressive, easy money monetary policy in the history of financial markets. For a while, interest rates on Japanese bonds were less than zero. They were negative. So if you were lending money to the Japanese government, you actually had to pay them. Now, they've somewhat relented on what is called a yield curve control as of late. However, the Japanese 10-year bond still only pays about 2.5% per year. So, what this does is it puts Japanese investors in a scrambling search for yield. The quote risk-free rate that they can get is only 2.5%. And the yen, relative to other G7 currencies, has gotten crushed over the past few years. Over the past 5 years, the yen has lost roughly a third of its value compared to the dollar, which has also lost about half of its value compared to goods and services. And in just the past 12 months, the yen has lost about 10% of its value against the dollar. So if you're a Japanese saver, if you're one of these folks with the $7.4 trillion in cash in Japan, you've got an inflation problem and you need to find enough yield to keep up with the loss in purchasing power of the yen. The safe options like Japanese government bonds are not cutting it. Okay, so why don't you just buy Bitcoin? Well, there's a regulatory problem and a tax problem. Right now in Japan, the capital gains rate on Bitcoin 55%. So if you bought Bitcoin at 100K and sold it at 200K, you made a 100K gain, but you're going to have to give more than half of that away to the government. Now, this may not always be the case, and there's currently legislation in Japan to change this and treat Bitcoin as a capital asset rather than miscellaneous income. But for the time being, buying Bitcoin directly is not really the best option if you're a Japanese citizen. But if you can get that exposure through a security like an equity or a bond, then you can get access to that Bitcoin upside without this tax anvil hanging over your head. So, this is a massive incentive for Bitcoin based securitized products in the Japanese markets. So, you have 1.1 quadrillion yen sitting in cash, the yen rapidly losing purchasing power, and a tax code that strongly disincentivizes buying Bitcoin directly. You can see the perfect storm forming right before your eyes. This is an enormous pool of capital in search of yield, and here comes Metaplanet with the perfect offering. Now, what exactly would that offering look like? Does it look like a stretch or SATA or a convertible bond? We don't quite know yet, but the fact that they have this license means the options are theoretically limitless. You could design any type of Bitcoin backed financial product. Where my mind goes is a Bitcoin backed bond. So, what is a Bitcoin backed bond? And how is it actually any different from Stretch or SATA, the quote digital credit products from Strategy and Strive? Well, to start, I actually think it'll make more sense if we begin by comparing a Bitcoin backed bond to a traditional bond. And if you're watching this video, you're probably familiar with what a bond is, right? It's the first thing you learn in Finance 101. It's debt, it's a loan, it's a contract. You give a company or a government capital, and they pay you a fixed rate. And then at the end of the bond term, they give you back the original capital. So if you had a 10-year bond, at 5%, you'd get 5% of the bond's value every year for 10 years. And then 10 years from now, you'd get the original capital back. It's boring, it's predictable, and that's the entire point. A Bitcoin backed bond would work similarly, but with one very important distinction. When you give the company that capital, when you buy that bond, they would take that principal and buy Bitcoin. And then over a 10-year period or a 5-year period, you would expect the Bitcoin to appreciate more than the interest rate of the bond. And thus, the company would be able to afford to pay a higher rate, a higher yield than what you could get buying traditional government bonds. So it would be a bond style product in terms of low volatility, predictability, boringness, but with amplified returns powered by Bitcoin. As I mentioned before, Japanese 10-year government bonds currently pay only 2.5%. And there's a very strong likelihood that Bitcoin over the next 10 years will go up much more than 2.5% per year. So if you're Metaplanet, you could issue a Bitcoin backed bond and offer a yield of 5%, 6%, 7%. We don't know exactly what that market would be, but you take those funds, you'd go and buy Bitcoin, you can offer a higher return, and then assuming Bitcoin appreciates at a rate it historically has between 15 and 25% per year, then they're going to make out just fine, right? Because they're borrowing money at 5, 6, 7%, buying Bitcoin, which goes up at 10, 15, 20%. It's a simple carry trade for Metaplanet. And if they structure the note correctly with a 5 or 10 year payback period, there's plenty of time for Bitcoin to appreciate, where even if Bitcoin drops in the short term, they're not forced to sell to pay back the principal, right? And from the bond buyer's perspective, they'd get a much higher yield than what they could get buying Japanese government bonds, but they'd still have that stability and not be exposed to short term fluctuations in the price as they would if they went and bought Bitcoin directly. So, Bitcoin like returns with bond like stability. And here's why this is bigger than it sounds. The product I'm describing is a real bond. It is legally a debt instrument, and this matters because of who can buy it. Right now, the quote digital credit products in the United States, Stretch and SATA, are by definition preferred equity. And I believe a couple things about these products. One, I think they will pay the dividends in perpetuity. Two, I think they will maintain relative stability to par. But also, three, there are a lot of funds that cannot buy it because it is technically preferred equity. And if you read the contracts of these offerings, there is no penalty should Strategy or Strive not make those dividend payments. Moreover, there's no legal guarantee of return of capital. These companies are active in the markets to try to keep each of these instruments trading around par, but there's no guarantee. If it were a true debt-based Bitcoin-backed instrument like I'm describing, this would open up to much larger pools of capital that can't technically buy preferred equity, but they can buy debt, can buy bonds. I don't hate Stretch or SETA, and I also don't love them like some people do. I think they're a stepping stone onto what would be the ultimate rendition of digital credit, which would be a true bond that is backed by Bitcoin, not preferred equity. This is not going to be the final form of Bitcoin credit. A real bond is debt. They have to pay back the debt by a certain time and they have to make the payments legally, right? There's no cop out carved into the contract where they can skip a dividend payment and just forget about it. And the stability of the capital is ensured by the fact that it will be repaid by a certain date, not buying and selling the asset in the market and trying to maintain this illusion of a fixed price on the security. I want to see who's following along. And if you understand this very important distinction, then comment Japan down below. I read every comment, and I'd like to know if you're picking up what I'm putting down. So, if this is such a wonderful idea, why can't every Bitcoin company do this? Well, there's two reasons, and they form this moat I mentioned earlier. And first is size matters. You have to have a large enough Bitcoin stack to operate at the scale these bond institutions need. You're not going to be able to do this if you have 100 Bitcoin, right? Metaplanet is the largest Bitcoin holder in all of Asia. They have more than 40,000 Bitcoin on their balance sheet. They're one of the top five largest companies worldwide in terms of Bitcoin holdings. They actually have the volume to execute this at scale. If any other company in Asia wanted to do this, they first have to go out and acquire billions of dollars worth of Bitcoin, which is much easier said than done. And second, and this is why this week's news is so important, you have to have a license. To sell financial instruments in Japan, you have to have a Type 1 securities license. Metaplanet just got that. It's a 100% acquisition. They have the full license they need to issue these securities. It is a legal key that unlocks the entire Japanese securities market in one move. So, no other Bitcoin company in the world has 40,000 Bitcoin, is domiciled in Japan, which is the most prime hot market to operate something like this, and has the securities license that you need. Metaplanet is truly one of one. We're talking about $7.4 trillion worth of cash sitting in Japanese accounts. It only takes a small fraction of that to come into the Bitcoin market through Bitcoin backed bonds for two things to happen. One, for the Bitcoin price to rally higher, and two, for Metaplanet to drastically increase the size of their Bitcoin stack. And right now, Metaplanet stock 3350 on the Tokyo Exchange and MTPLF on United States exchanges is actually trading at a discount to the value of their Bitcoin holdings. Their multiple to net asset value is less than one. So if they sold all of their Bitcoin, they'd generate more cash than what the market is currently valuing the company at. And this is a mispricing, in my opinion. If there's any company on earth in the Bitcoin treasury space that deserves a premium to the value of their Bitcoin holdings, it's Metaplanet. If you're a Japanese investor, you have a significant cost to buying Bitcoin directly. So you probably want a securitized exposure to Bitcoin. That warrants a premium on Metaplanet. Additionally, they don't have all this competition that US Bitcoin treasury companies do, right? You can only think of one in Japan. It's Metaplanet, right? There's dozens and dozens of these companies now in the US. We've already seen what the MNAV can do when the market is hot, when Bitcoin's ripping. Metaplanet traded at nearly a 10x MNAV just this time last year. And nothing structurally has changed, right? A year ago, we still had these dynamics at play. Japan had low interest rates, they were yield starved, they had this Bitcoin capital gains tax. Those dynamics are still at play, but now Metaplanet has a securities license to tap into these markets more effectively. So if you were bullish on Metaplanet last year when Bitcoin treasuries were hot and that was the thing, then you should be 10 times more bullish today. Now, there's always risks, right? One, this acquisition hasn't technically closed. Two, we don't know for certain what type of Bitcoin financial products they would issue, what those terms would look like. And three, we don't actually know what the price of Bitcoin will do. I have a data driven long term thesis. I think it's going up, but there are no guarantees in financial markets. So, with that said, here's what I'm watching. I'm watching to see if this deal finalizes. I'm watching them rename to Metaplanet Securities. I'm watching to see what that first actual product would be. And then I'm watching to see what the demand for said product is. We're in the very early innings of something that could reshape the way an entire country thinks about finance. Furthermore, I think Japan is a foreshadowing of where the US economy is headed. They have a much older population. Their government has a very high debt to GDP ratio, over 200%. The United States is trending in that direction. You have the baby boomer generation entering retirement, and they're heavily dependent on government subsidies, Social Security, Medicare, Medicaid. The US government is already the US government already has a debt to GDP ratio north of 100%. It's going to trend higher as they have to continue spending to keep the baby boomer population afloat. As debt to GDP continues to rise, you'll likely see the United States enact similarly aggressive monetary policy as we've seen from Japan. If you found this content helpful, then you will love the Blockware newsletter, link in the description. Every week, we provide an in depth breakdown on all things Bitcoin, macroeconomics, and Bitcoin mining. Link is in the description. Make sure to smash the like button and subscribe to the channel. Thank you for watching.